Boom, we are alive, ladies and gentlemen. Thanks for joining us. Just going to do a quick little market update, keep things simple today. Bitcoin ripped all the way to 70 grand pretty quickly, and then we have dropped back down. But remember, we've got a massive amount of liquidation potential at that $72,000 mark as well. So the market's going to try to protect that at the current moment. So we've been building this nice horizontal trading range. Whether it's distribution or accumulation, I think has yet to be seen. Although, as I've mentioned in the past, we should assume that it's going to be reaccumulation until proven otherwise. Many times before, the market will basically try to confuse people. That's I think this, I'm just going to call them all my videos, the market manipulation of some kind or another, because that seems to attract the most people. More people watched yesterday's video than have watched my video in a while. And I think it's because I use the word manipulation in it. So the Bitcoin price is being manipulated by people selling it and people buying it, because that's how you manipulate the price, is by buying and selling assets. Super simple. But there's a massive amount of liquidation potential here, $20 to $30 billion worth of liquidation, somewhere around the $72,000 mark. So this is important. The market's going to try to protect that at the moment, because that's a massive amount of positions that will basically be lost. And once you kind of take that area out, we'll probably jet a little bit higher. So again, my current thesis is there's one of two strong decision-making tactics. And again, this looks like it could be a spring. I was a little bit early. I thought this was spring last time, although there's pretty good argument for why I was wrong there to begin with. So that's not too difficult. But we do see fairly similar volume and supply signature structure here, which is usually what happens to the spring and the primary shakeout. So there is more reason, again, to believe that that's the case. You have a huge amount of ETF buyers here that are down near the $40,000 mark. But for now, Bitcoin has been doing a really great job of protecting the 200-day simple moving average. So I've been talking about the likelihood of coming back down to test and create a smaller range here. So I think that's what we're going to see. And actually, I used the S&P 500 to look at this previously, but this type of rising channel that we're in here right now, something like this, we're going to know from the trading range that's effectively forming right here. So if I take the bear claw off, it'll be a bit clearer. So right now, this actually doesn't look great for this particular structure. So we're going to want to keep an eye on this, because this is usually what distribution looks like, is when you have your up thrust and then you fall back into the range. But this can also turn bullish. It's one of the hardest things, is that when we start to look at these smaller time frames, it's just not as easy to know where we are in the market as when we first started the bull market cycle in the early parts of 2023, because there's clear indications, the supply signature, the change of the market structure, and the change of the market dynamic as well, which is generally in Wyckoff is known as the change of character. So on these smaller time frames, on the 6 hour here for Bitcoin, there's an argument that this could be an upthrust. We see distribution. If we can't come back and then we start to close below, we're going to go much lower. But for now, again, what I think is going to happen is we're going to actually find out that this is a reaccumulation range in the middle of the box. And what is likely the case is the market is going to want to try to get rid of that massive amount of short interest that's built up there at 72,000. So we see some type of reaccumulation range in the middle of the box, which is so far what we've been seeing. And then we move to the top of the box, rip out all that liquidation. And then from there, one of two things is going to happen. We're either going to see a reaccumulation at the top of the box here, and then we go into the new final highs of this bull market cycle, or it turns into an upthrust of around and really quickly moves up to the 70, maybe even $85,000 mark, comes back down. We see some type of piercing top, and then we actually finally break structure and then come all the way down to 30,000. So these are the two scenarios. Either we come back down to finally take out both the liquidation on the short side and the liquidation potential on the long side. That would be great. Market likes to get rid of over leveraged positions. In general, it's the best for people who are trying to buy spot is to get rid of the liquidations on either side of the market trend. So this would be the market trend that would have that happen, where you very quickly wipe out all of the short positions at 72,000 and then rip down really quickly to the $34,000 area and wipe out all the longs down there too. So That's what this market structure would look like. From there, again, I don't think the bull market would be over. I think it would just do something like this and then end up going much higher very shortly afterwards. That you'd see a short reaccumulation cycle at the bottom. So either way, this scenario has us going higher in the long run. So we're just going to want to be cautious, because at the moment we should believe that this reaccumulation, do we see something like an inverse head and shoulders before going to the middle of the box and then moving up, and then probably upwards of $120,000 if we're about to complete that signal now. So it's a little bit clearer if we put the bear claw back in and then go out to the daily, what the bullish structure might look like. Yes, because the bullish structure would have us probably retesting the 200 simple day moving average, which is currently around 60,000. So something like this, where you see a horizontal range that tests this before moving up to the top, taking out all those short positions and then continuing up to the finality of the high. So just like any market cycle, there's two real, when we're up this high, it's harder to make really strong trades. Whereas if you go back to my videos again in the start of 2023, this was clear change of character throughout the market structure to jump back up above the 200 simple day moving averages and stay there and above the 314 day simple moving averages. So we were screaming go long literally everything in this area, and that worked out perfectly fine. But again, every time we get up higher, we leave this market dynamic of accumulation and we start to go into the reaccumulation stuff. It's just better to be protective of your principles or your assets to begin with, because it's a hell of a lot harder to deem market structure this late in the movement. So although again my current thesis is that we're going to go higher because of the amount of time into the accumulation range here, just good to be cautious. But for now it looks like we're going to build this horizontal reaccumulation range in the middle of the box, and then we're going to go higher. That would be my guess, is we lean towards bullish. But again, we're just going to be really careful, because we could easily see a market dynamic that does something like this and then it becomes upthrust after distribution, rips down to 43K, gets rid of both short interest and long interest on both sides, and then finally goes higher. Yeah, market manipulation. No, it's just bigger players that like to buy and sell assets because they have a shit ton of the asset to get rid of and to accumulate. So when you have that amount of capital inside of an asset structure, all you have to do is sell it, remember. So buying and selling is market manipulation, but that doesn't make any sense. So it's just people buying and selling in the market is how you manipulate the market. So if you happen to be someone that owns a shit ton of Bitcoin, you can sell it and move the price down. That's not manipulation. That's just how markets fucking work. Although this video is also going to be titled Market Manipulation, because that seems to get the most clicks. So there we go. Anyways. It's not true, but people like things that aren't true, I guess. Actually, it reminds me of that cartoon where everyone's like, oh, do you want good advice, or like would you like change in your life and all the hard work that comes along with it, or just like the pill that gives you the change in life? Some people generally just go for whatever pill they can take. Okay, quickly, again, market dynamic here for Fetch, staying below the 200 moving average on the 6 hour and caught between it on the daily. So again, this is another reason why I believe it's accumulation. To me, this looks like we're about to form a horizontal accumulation range here for Fetch in between the 200 and 314 day simple moving average. Solana ripped up to $191 today, although we do see some bearish divergence here. The MACD bearish divergence as well, bearish divergence on the RSI too. So there are some indicators that we're going to come down and finally get that test that we were looking for. I didn't actually think we would get this high for Solana this quick. I thought the test would happen earlier. If you go back to our videos from just a few days ago, I thought the test was going to be basically when we got to 160, I thought we were going to come back to test 148. The fact that we haven't done that just goes to show how much interest there is in people playing in the Solana space, which is fascinating to me. But nonetheless, I think that now this is a good time to see that test, because there's just such strong bearish divergence here on the current RSI. Now, That could switch. It could just go into full bull mode. But when we're at the bottom of the range is usually when you want to enter. Like if you're trading, you generally want to enter at the bottom of the range and be exiting near the top of the range. The only time you want to be entering more heavily at the top of the range would be similar to Bitcoin here, when we had clearly broken above the range and retested the range itself. So here you'd want to buy at 15,000 and normally exit around 20,000, which is what most people were doing. I remember people were expecting us to go down to 12 grand here. But when you test the top of the range like this and you see a clear SOS and reaccumulation pattern, this is a screaming sign to go long, fucking go hard long, like hard long. All the longs you can get, go long that long. Because if you test the top of the range and maintain that, then you have a bullish structure confirmation, which is significantly more powerful than just range trading. You can actually get really, really big trades that come out of that. And that's what I like to do. It's much more of a macro style trading. All of this daily stuff that happens in between is just a wash. And some people are really good at day trading this. Again, you've got 20% both to the up and down side here for Bitcoin. So for those people that are really good at day trading, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different opportunities to make like 15 or 20%. And when they're playing with leverage, it's actually not a bad game. I just don't have the emotional skill set to deal with that. And there's other things I want to do with my time other than be focusing on the charts. The reason I like to do this is because I'm trying to figure out where we are in that larger macro dynamic, because if we do get, again, a bullish structure confirmation, we're going to go from 70 to upwards of 120,000. And then there's a really fun ride to play with a very high level of confidence, where the level of confidence here is you got to be in a trade, you're going to be out of trade in just 10 days. And that's usually not how I like to take a look at things. The S&P 500, we're going to zoom in here, and we're probably going to end off with a few things. I'm actually going to look at gold today as well. Maybe this video should be called Gold and Bitcoin Price Manipulation, because everybody will click on that, right? And that's what we're going to do. Today's video is called Gold and Bitcoin Price Manipulation, just for shits and giggles. The supply signature here, first off to note, we're seeing a decreasing supply signature moving into this market dynamic up. So falling supply, rising price. We're getting near the finale of the rising price, but notice the selling of the supply has increased over demand. So supply, when we say this, it means the selling structure, and demand the buying structure. So buying is for us teal, and selling is dark blue. Just so you know, I like these colors here. They help get rid of some of the emotion, but the supply structure has increased over the demand structure. So again, just so I'm being clear here, there's more selling than there is buying at this particular point. But on the daily here, we have totally reset the stochastic RSI. We haven't crossed underneath the MACD, which is nice, but we're aiming straight down on the daily. And we are starting to point up on the stochastic RSI too. So we may have bottomed out here for the S&P 500. And my current belief is that there's just no real reason to own dollars anymore, because dollars are basically worthless and assets are more valuable than dollars, and they're going to continue to print more dollars here soon. I think the next rate cycle is going to come up, and they're going to be like, oh, we have to cut rates. We're in a deflationary environment. We need to actually increase the velocity of the dollars into the ecosystem, and here's free money for people. Everybody gets a $1,200 check again. And then we're just going to see a market blitzkrieg in the future. So I think this is going to be very different than most of what people think. I hear a lot of talk of a huge market collapse. The same way people thought we were going to have a market drop down here, I said, you just go long, like go long and stay long. I even called out Michael Burry. I was like, this motherfucker has more money than me, but I bet I'm right. Now, it's a lot harder to have less money and be right. But anyways, that's a different story. He exited those positions when he realized he was wrong. So either way, Michael Burry could have gone short fucking Pfizer, and it was the greatest short of all time. Pfizer's just been absolutely annihilated, as it should be. It's a totally garbage piece of stock. But nonetheless, the S&P 500 here, again, I think is just going to keep moving into new all-time highs. I think once we break resistance at 570, we're going to rip for a while, and they're just going to keep printing and printing and printing. I think that's how they end up owning everything, and very few people end up owning anything. Retail is not here. Retail has no money. If you go out onto the street and talk to average people, So I'm not an average person, so you can't talk to me about this. But if you go into the street and talk to average people, they're going to tell you the same thing. They're hurting. They don't have any money to buy stocks or anything. So who's buying? Who's buying stocks right now? Big players only. And big players have a unique advantage. They don't really care. They have so much extra capital quite often that they're just going to drive the market price up. And if they know what we already know now, which is dollars are basically going to be printed into infinity and beyond, people are posting about UBI and crazy shit left, right, and center. So just listen to them when they tell you what they think they're going to do. They're going to try to get into some UBI game, and the markets are just going to go up. And by that time, all the assets will be so expensive that even though they're giving you free money to spend on food and clothes, you won't be able to buy any fucking important asset with it unless you've already accumulated some sort of wealth or are generating wealth through a business. So I highly suggest if you're not doing that yet, you should be focused on how you provide value sooner rather than later, because if you just have a regular job, it's not going to last long. You're going to be replaced by AI super fucking quickly here, unless you have some type of job that's more valuable than most people's jobs. So they're very far few between. Lastly, let's look at gold price manipulation. So again, we were using gold here as one of our kind of leading indicators for what I believe is the start of the more movement in the bull cycle here for Bitcoin. Again, you've got a multi-year cup and handle that appears to have finished its formation. Here's the cup. Here's the last part of the handle. And again, this is why buying at the top of the resistance in a bull cycle is powerful, because now since the top of the resistance line, that gold is up already 30%, 40%, right? So there are times when buying at resistance makes sense, but it's not until you have confirmations of that resistance being the new support. And this is what a wonderful accumulation and very traditional cup and handle look like. Anyone who shows you a cup and handle on an hour chart or a 6-hour chart is retarded. They're basically making more money from affiliate links than they are trading, and they can lie to you about how this stuff works, sadly. I wish I would have sold more affiliate links. I would have made a hell of a lot more money than I ever did trading, because affiliate makes a fuck ton of money, apparently. I'm in Dubai here, and I learned affiliate links make way more money than you can trading, and that's why a lot of these guys have so much. It's not because they're good traders. It's because they have so much money rolling into their affiliate accounts that if you trade incorrectly, it's basically impossible to get it wrong. They're just funneling money into your account. If you can't get that right, you fucking suck. Anyways, I'm not salty. I'm just saying this is what a cup and handle looks like on a multi-year extension, and this is what they usually look like. They usually take a few years to form. A good accumulation pattern like this has so much strength going into it. We just saw the portion of the backup phase for gold here, and we just started the first part of the SOS, and this is why I believe Bitcoin's price is not done, is because the same momentum that's going to drive gold into new all-time highs, and we're probably not far away from that, is the same momentum that's going to drive Bitcoin into new all-time highs, which is the understanding of just how bad the financial and monetary system is, and that assets are the only real value left in this ecosystem, and the dollars themselves are just like fucking hot potatoes, and everyone's going to be trying to get rid of them as quickly as possible once they figure that shit out. Lastly here, we'll end off with the dollar. More manipulation. Clearly people are going to want to be getting rid of dollars. I think this is actually turning into redistribution. We again, at the very first part of this, it was hard to say, but it's looking more and more like this is going to turn into redistribution, and then we're going to come all the way down to the 92 mark. I think we're going to break right through the previous area of resistance that had held us up in this multi-year channel. I think that we've already seen our SOS and backup phases for this. Again, if it's one of the things that's unique about the dollar chart here is we have to take into account just like the decades of experience. Now, the other thing that's interesting here that could break that sentiment is, again, the idea that, we're in accumulation. Here's your SOS and here's your LPS, that we could see another rip higher. All the other world, or all the other G7 countries are going to start printing here eventually too. I think they're all going to do the same thing. And it's likely that the dollar will still have some of its branding. But if you think about, there's billions of people in India and billions of people in China, the United States dollar could very quickly become totally irrelevant in terms of domestic and international trade. So I'm not super heavy on the bet of the idea of the dollar going significantly higher, even if the other countries start to print. I think that they're all going to just be degrading at one point or another. How fast which one fails over the other is very hard to tell. At this point, again, it's just better to focus on what monthly path and process can you take to generating wealth in dollars or Bitcoin, I guess, through affiliate links, apparently, and then trading that for assets. So if you're already generating Bitcoin, great. If not, whatever you can do to pursue your own business and your own passions and career, trade those dollars for assets pretty much as quickly as possible over the next few years, because we're going to end up in a really weird time. Something one of my favorite quotes is this idea of I had a really good friend of mine, a previous business partner, talk about UBI, and he's a really smart guy. He's in the other areas of business, he's brilliant, but he posted this thing and everybody gave him flack. And it reminded me of this quote is this: if printing more dollars made more people wealthy, printing diplomas would make more people intelligent. And that's just not how this fucking game works. All you do is end up with an oversaturated, undereducated, poorer group. Not a wealthier class because the governments are giving them free money, but actually poorer. So keep that in mind. Free money doesn't mean free money. It means you're getting some way or another by that government. So just keep that in mind. See you with the Arcane Barrel. See you in the next episode.